Hello and a very good afternoon to you. I'm Rachel and you're watching 𝐊𝐴𝐿𝐵 Studios. It's lunchtime here in Sydney and it's time for the mid-market pulse. In this show we'll take a look at the overall Australian share market performance by midday trading session. We'll also explore the biggest winners and losers of the day before focusing on stocks that have grabbed headlines today in our final segment. The Australian share market remained under stress by the afternoon as investors turned jittery ahead of trade balance and housing finance data for the month of July. That's slated to be announced later today. The macro data follows the better-than-expected gross domestic product figure released on Wednesday. The fall in commodity prices, especially iron ore and crude oil, as well as a swathe of ex-dividend stocks, also dragged the market lower today. The ASX 200 is currently trading 1% down by lunch. Early today, the index opened lower and nosedived as much as 1.2% to hit a low of 7,437.2. Shares of BHP, CSL, NIB Holdings, Woolworths, Datura and Perpetual were trading lower as stocks turned ex-dividend today. Bucking the trend, InvoCare, Clinuvel Pharma and Platinum Asset Management traded higher on their ex-dividend date. The equity market witnessed broad-based sharp sell-off as all 11 sectors are bleeding in the red. The materials sector was the worst performer with 2.8% loss, owing to a slump in the iron ore price. Now, iron ore dropped 6.7% to $143.43 a tonne. That was following a contraction in manufacturing activity in China. Sector heavyweights like the BHP Group, Rio Tinto and Fortescue Metals are among the top losers. Amongst others, consumer staples and healthcare sectors were down 1.5%. Whilst utilities, REITs, telecom, industrials, financials and also tech saw a surge in selling activities. On the COVID-19 front, New South Wales reported 1,288 new locally acquired cases and 7 deaths in the past 24 hours, while Victoria's case tally stood at 176. Meanwhile, New Zealand detected 49 new locally acquired cases at the epicentre of Auckland, taking the total tally to 736 in this outbreak. Now let's turn our attention to the biggest gainers and losers in the mid-market session. The top loser on the benchmark index was malt supplier, the United Malt Group, which is the 4th largest commercial malt supplier globally. Saw a loss of 7.4%. Some of the other worst performers were blue chip miner BHP, royalty business Datura Royalties, real estate firm Abacus, health insurer NIB Holdings. Meanwhile, healthcare group PolyNovo topped the gainers chart by rising 4.3%. Some of the other notable gainers were biopharma major Mesoblast, tech firm Nuix, pharma major Clinuvel Pharmaceuticals and technical service provider ALS. Next, let's take a look at an IPO. Engineering services firm TEK-Ocean Group made a weak debut on the ASX today, falling 6% in the opening deal. The company started trading under the code TEK-Ocean Group after successfully raising $6.6 million in its IPO at an issue price of 50 cents per share. The funds raised through the IPO were used to execute on its business plans, including expansion of the existing and new business opportunities and capital investments. It was founded in 2007 in Gippsland in Victoria. TEK-Ocean provides integrated services solutions for the energy industry. Next, travel retail outlet Flight Centre Travel Group shares dropped 0.5% following a signing of a corporate travel joint venture in Japan. The company has formed a JV with Tokyo-based NSF Engagement Corporation to launch its leading FCM travel management business in Japan, the world's 4th largest corporate travel market. The move is part of the company's strategic expansion plan within the Asian corporate travel sector. FCM Japan will be operational from January 2022. Currently, Kenichi Shirawashi will be leading as the general manager. He's currently the leader of NSF Engagement's corporate travel business. Flight Centre Managing Director Graham Turner says Japan was a significant addition to the global FCM network, which now extended to 97 countries through company-owned businesses and licensing agreements with independent local operators. Now, before we move on to some more updates, let's take a very small break. Stay with us.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
Sectoral coverage or industry news.
we cover it all on our news segments.
Be on top of the latest news
With 𝐾𝐲𝐿 TV.
Hello, welcome back. I'm Rachel and you're watching the mid-market commentary on the Mid-Market Pulse Show. We're discussing the shares that are in the news today. Shares of Cenex Energy traded flat. That was after the company followed a gas sales agreement with Australian packaging and paper manufacturer Opal. The pact is for up to 6 years and up to 12 petajoules of natural gas. Under the initial 4-year agreement, starting in January 2023, Cenex will provide around 8 petajoules of natural gas to support the Opal Paper and Recycling Division's manufacturing operations at Botany in New South Wales. The agreement provides Opal with competitively priced natural gas, which is an essential manufacturing input. There's a contract extension of up to 2 years and up to a further 4 petajoules of sales, providing Opal with some flexibility in the medium term as it continues to explore long-term energy solutions. Since 2019, Cenex has signed approximately 70 petajoules of natural gas sales agreements with a range of household names including CSR Building Products, Aurora, CleanCo Queensland, Alinta Energy, Adbri, Southern Oil Refining and now Opal. Next up, shares of West Wits Mining dropped 9%, and that was after the gold miners' Carla Shallows project delivered positive results, supporting progress to stage 1 of mine development. The project is located on the Kimberley Reef in the Witwatersrand Basin in South Africa. The definitive feasibility study carried out by the company supports an underground mining operation with a robust rate of return of over a 17-year life of mine. The completion of the DFS is a key achievement in West Wit's journey of transforming from an explorational operation to a mid-tier gold production company. Moving on, shares of mineral explorer and mining company Nevare Minerals are trading flat. That was after they released an ASX announcement. The company's started a 4,000-metre diamond core drilling program on the Nelson line, which accounted for 80% of the 400,000 ounces of gold produced from the St Arnaud goldfield in the past. The diamond drilling follows completion of a 5,000-metre diamond core drilling campaign on the adjacent New Bendigo line. With a $14.1 million cash balance, Nevare is fully funded to continue exploring this project, which covers 1,600 square kilometres. Matsa Resources shares gained over 5%. That's after the miner issued a mineral resource estimate update for its Fortitude Stage 2 mine. The company's gold resource reached near 1 million ounces at its Lake Carey gold project. That was following an upgrade of Fortitude Stage 2. The company said that it's evaluating the impact on the existing Stage 2 mine plan, which has the potential to make a substantial positive mining and economic impact. Well, that's a wrap for today on the Mid-Market Pulse Show. I hope you enjoyed today's show. We've got more trending market updates for you. Keep watching 𝐾𝐿 TV. I'm Rachel, signing off for now.